What is driving India's economic growth? It's a question that has intrigued economists and analysts alike. The Indian economy is currently experiencing an impressive growth rate of 7.3%, outpacing even the most positive predictions. But what's behind this robust increase? As we delve into the details, we find that it's not just about consumption anymore. The growth engine is now being fueled by something else: investment. Unraveling the factors behind this growth, we find a significant shift from consumption to investment. Investments, as measured by gross fixed capital formation, are soaring. The projected growth stands at an impressive 10.3% for the fiscal year 2023 to 2024. This leap in investment isn't just a number. It's expected to elevate the investment to GDP ratio to 29.8%, marking a nearly 1 percentage point increase from the previous fiscal year. But what's behind this upswing? The answer lies in the government's sustained emphasis on capital expenditure. Capital spending by the government has seen a substantial increase, with a growth of around 31% in the first 9 months of the fiscal year. A significant amount, around 75% of the allocated funds, has been sanctioned under the Special Assistance Scheme for State Investments. This surge in investment activity is primarily propelled by the government's sustained emphasis on capital expenditure. It's a clear testament to the power of strategic investment in driving economic growth. Investment spending by state governments, however, has been slower than anticipated. A recent study conducted by economists at the Bank of Baroda revealed that out of the projected capital expenditure of 7 lakh crore rupees by 26 states, only 3.18 lakh crore rupees or 45% had been spent by November. This is a stark contrast to the government's capital spending, which has seen a substantial increase, and the robust household investments in the real estate sector. The housing market in particular is experiencing a surge, with sales hitting their highest in over a decade. So while state governments are lagging behind in their investment spending, households are stepping up, filling the gap and keeping the investment landscape vibrant. Despite slower state government spending, the overall investment landscape is buoyed by robust household investments in real estate. The dynamics of private corporate sector investments are changing. Public sector spending is playing a significant role in crowding in private investment. This is largely driven by high corporate profitability, which is beginning to trigger the creation of fixed assets. However, it's not all sunshine and rainbows. A report by economists at the Bank of Baroda paints a more nuanced picture. Concerns have been raised about the lowest levels of new investment announcements during the April-December period in recent years, excluding the year 2020. Nearly half of these new investments were concentrated in the aviation sector, with airlines placing significant orders for new aircraft. Foreign direct investments have also seen a downturn, declining by 4.1%, totaling $47 billion during April-November. This indicates that while private investments may be gaining traction in specific sectors, there is limited evidence of a comprehensive resurgence in corporate investment activity. In conclusion, the Indian economy's robust growth is largely underpinned by a notable shift from consumption to investment. This shift is a testament to the resilience of India's economy, as it continues to exceed expectations thanks to a surge in investment activity. This surge is largely fueled by the government's continual focus on capital expenditure, an emphasis that has seen a substantial increase in government capital spending in the past fiscal year. The spotlight also falls on the household sector, which has shown a robust investment trend, particularly in real estate. The housing market's highest sales in over a decade are a clear indicator of this strong household investment trend. However, while these factors have played a significant role in driving growth, they are not without their challenges. State government spending, for instance, has been slower than anticipated, a factor that needs to be addressed to ensure the continued growth of India's economy. In the private corporate sector, although public sector spending is increasingly crowding in private investment, there is a need for a comprehensive resurgence in corporate investment activity to maintain the momentum. Moreover, the decline in foreign direct investments is a point of concern, indicating the need for strategies to attract more foreign investments to sustain and further enhance India's economic resilience. It is paramount to accelerate state government spending and ensure a broad-based revival of corporate investment activity.